Hey everyone, welcome back to Corporate Decoder, the place where we try to make sense of what corporations are really up to often, with a little bit of juicy drama hiding in plain sight. Today we're diving into a fascinating 8K filing from Melar Acquisition Corp. That is Melar Acquisition Corp. Now this isn't your typical quarterly report full of bean counting, so we're going to decode what is really going on behind the scenes, and it looks like they're playing a bit of a waiting game. So Melar Acquisition Corp, this is a special purpose acquisition company or SPAC. Think of them as a company created to go out, find another private company, and essentially bring it public through a merger. They've been in the process of merging with a company called Everly Global Inc., a Nevada corporation. This filing is all about a tweak to the original merger agreement. The big news here is that on the 8th of December 2025, the parties involved signed a second amendment to their merger agreement. What does that actually mean for us? Well, it's pretty simple. They've extended a deadline, specifically Everly Global Inc., needed to provide certain financial statements to Melar Acquisition Corp. Based on generally accepted accounting principles or GAAP standards. That original deadline was the 30th of November 2025, but now it has been pushed back to the 16th of January 2026. Now, why is this important? Well, these financial statements are crucial for the merger to move forward. They show the health and financial standing of Everly Global Inc., the company that Melar is looking to merge with. Pushing back deadlines for these key documents can sometimes signal that things aren't moving as smoothly as planned, or maybe they just need a little more time to get everything in perfect order. For SPACs like Melar, the clock is always ticking because they typically have a limited time to complete a merger before they have to return money to investors. Let's look at what Melar Acquisition Corp actually trades as. They have units often referred to as Massey U. Each unit is a package deal, basically one Class A ordinary share of the company, and then half of a redeemable warrant. A warrant is like a ticket that gives you the right to buy a company's stock at a set price in the future. Then there are the actual Class A ordinary shares themselves, which you can trade under the ticker symbol MASI, and of course the warrants, which trade separately under MASI W. These are exercisable for one Class A ordinary share at an exercise price of $11.5 per share. This structure is pretty standard for SPACs. The units are usually put together to make them more attractive to investors initially, and then they can be split into shares and warrants. This report is being filed with the US Securities and Exchange Commission, or SEC, which is the US government agency that keeps an eye on the stock market and ensures companies are being transparent with investors. They are making sure that everything is above board. This specific filing is a Form 8K, which is used to announce major events that shareholders should know about. In this case, it's a significant update to their merger agreement. The report is dated the 8th of December 2025, and that is the date of the earliest event reported, which is the signing of this second amendment. The company is Melar Acquisition Corp. They were incorporated in the Cayman Islands, and their ticker is MASI. It is worth noting that this filing is also mentioning the upcoming business combination and the need for a registration statement. This is a document that will be filed with the SEC, and it includes a proxy statement for Melar shareholders and a prospectus for the securities that will be issued in connection with the merger. Think of it as the official guidebook for the merger, detailing all the important information shareholders need to make an informed decision. They emphasize that shareholders should read these materials carefully when they become available because they will contain crucial details about the merger. This is standard legal language, but it underlines the importance of investors staying informed. The company also touches on who might be considered participants in soliciting shareholder votes for the merger. This includes directors, executive officers, and other management members. It is basically a heads up that these individuals could be seen as encouraging shareholders to vote in a certain way. It's also important to understand what this report is not. It clarifies that this 8K filing is not itself a solicitation for votes or an offer to sell securities. They are simply reporting an event and reminding everyone where to find more official documents. Like most corporate filings, this report includes forward-looking statements. These are statements about future expectations and plans. The company is basically saying, hey, these are our hopes and plans, but things might change and actual results could be different. They are covering themselves from any future surprises by warning investors not to rely solely on these future predictions. This is where things get interesting and where we see the risks. They list out several potential hurdles. This includes events that could lead to the termination of the merger agreement itself. This is a big one because if the deal falls apart, it could have significant implications for investors. Another major risk pointed out is the inability to actually complete the business combination. This could happen if they don't get approval from the shareholders of either Melar or Everly, or if other conditions required to close the deal aren't met. For SPACs, this is always a critical pass or fail moment. They also mentioned the ability of Melar to stay current with its SEC filings. This might seem like a minor detail, but for a public company, maintaining consistent and timely filings is crucial for credibility and regulatory compliance. Missing deadlines or having issues with filings can raise red flags. This is particularly relevant. They're highlighting the risk that the necessary financing for the merger or for Everly's operations after the merger might not be secured or might not be secured on good terms. This is a key piece of information because it directly impacts the financial viability and growth potential of the combined company. If they can't get the money they need, the business plan might be dead in the water. So the core of this filing is this second amendment to the agreement and plan of merger. It's a little procedural, but it signals that the parties are still working towards a merger, even if it is taking a bit longer than initially planned. The extension of the financial statement deadline suggests they are diligently working through the process, but also that there might be some complexities they are navigating. And finally, this filing includes an interactive data file, which is essentially a machine-readable version of the filing designed to make it easier for computers to process and analyze. Alright, let's dive into what this all means. Melar Acquisition Corp. is facing the common SPAC challenge of getting a deal done within a set time frame. The extension on the financial statements for Everly Global Inc. is a neutral to slightly negative sign. It is not a deal breaker, but it does indicate that due diligence or perhaps the process of preparing those financials is taking longer than expected. From a Warren Buffett perspective, we always look for companies with strong fundamentals and a clear path to profitability. In the case of a SPAC, the primary focus is on the target company Everly Global Inc. and its ability to execute its business plan post-merger. The fact that they are extending deadlines for financial statements means there is still a lot of work to be done on the financial transparency front. We don't have direct financial tables in this specific 8K filing, but the need for these GAAP-audited financial statements is a strong indicator that investors will want to scrutinize Everly's financial health very closely once they are provided. The risks outlined are pretty standard for M&A and SPACs. The possibility of not raising sufficient financing is a critical one. If Everly needs external capital to grow after the merger and can't get it, then the whole proposition could be in jeopardy. We also need to consider the competitive landscape for Everly. What industry are they in and how do they stack up against competitors? Without knowing more about Everly's specific business, we can only analyze the structural risks surrounding the merger itself. In conclusion, Melar Acquisition Corp. is in a holding pattern. They've extended a key deadline in their merger with Everly Global Inc. This shows activity but also a slight delay. The real story will unfold once Everly's audited financial statements are released and the larger registration statement is filed. Until then, investors should be wary of potential financing challenges and the overall timeline for completion. It's a waiting game and we'll be watching closely. So what is your take on this extended deadline? Does it make you more or less confident in this merger? Let me know your thoughts in the comments below. If you found this breakdown helpful, please give this video a thumbs up and subscribe for more dives into corporate filings. And don't forget to join our Discord community linked in the description for even more discussions and insights. Thanks for watching, and we'll see you in the next Decode.